morning, Pandian sir. Um, so the first and foremost question that I would like to ask, since the audience may be uninitiated to the field of credit insurance and export credit insurance, would you like to throw some light on credit insurance in general? What does ECGC do? And specifically, what does the buyer underwriting department do, which you head?
Good morning to you, sir. Thanks for the opportunity at the first day. Yes, credit insurance is a concept where we underwrite the non-payment risk of the overseas buyer. So ECGC per se was established for the pure purpose of underwriting the overseas buyers risk, so that the Indian exporters have a comfort in their export activity. So it all happens where we have, although all the laws are in place, when it comes to a default, recovery becomes a very big task, because we are dealing with an international country where the laws are different, the systems are not common everywhere. So when the agencies, all other agencies are encouraging the exporters to venture into exports, when they get into a non-payment situation, they are virtually stuck. And there are countries where the cost of litigations are too high. There are countries where this option is totally not available. There are countries where the options are available, but there is it's very complex or time consuming. So with this background, for an exporter to venture into an export becomes a very difficult task. This is the whole motto for which ECGC was brought in. This credit insurance concept was introduced by the Government of India, and we have been in this industry since 1957.
And what specifically the role does buyer underwriting department, which you head, carry on? Because I believe it's a heart and soul of the.
In fact, buyer underwriting department is the nucleus of the policy business, where it is centralized at a head office. We do the due diligence on each of the buyer on whom we underwrite, and we take a call whether the buyer the risk can be assumed or not. It's not that every buyer that an exporter wants to cover will be covered. Unless he meets the minimum criteria of the due diligence, we are not going to underwrite on it. The next is to what extent we can do, and what are the terms of payment that we can assume on that buyer. So this due diligence is done at the centralized department, and we decide whether a buyer is to be underwritten or not. If it is to be underwritten, to what extent we can assume a risk. So without this, the policy business will not perform at all.
Sir, in your experience, since there are, as you rightly pointed out, that in different countries, the information availability is vastly different. So typically, which are the major countries that you would typically be underwriting right now, and what sort of differences would you notice in terms of information?
See, the export has got a traditional market, that is the US and Europe, and now we are expanding our market to Europe, to the African countries and to the South America. The US, before I took over this department, I had a feel that the developed countries are very liberal, it is very transparent.
Yeah.
So you get a credit report means you get all the financials of those countries. But when I resumed office here, it was shock to me that we don't get the financials mostly for the USA, which is one of our major markets. And Europe also, again, it is not that easily available. So this is a big challenge for us. So we need to more rely on the nature of that industry, how long they have been in the business, what is the number of employees. And for USA, we get one good information, which is called FedEx, how long they have been paying on time, if there are any delays in their payment. So these information help. Likewise, Europe has also got a similar information, but with a little bit of variance. So they say that viability. So with that, we are able to take a call. But what I thought will be a challenge in African countries and Asian countries getting financial is gone wrong after I assumed office. So the financials, getting financials has always been a challenge for almost all the countries. So we have to take a call based on the age, the industry, and our experience. This plays a very major.
And your experience in your own database would be quite rich in terms of the experiences over many decades, right? So one thing I wanted to ask is generally, what has been your experiences regarding the claims and the losses that have been witnessed? I mean, since I think the introduction also she mentioned that you were in the claims, I think, and even now in the BOD. So it's like BOD is like the gatekeeper, and then later on claims is like So, in your experience, how has the the claims and experience has been with respect to different geographies, and also with respect to any specific industries in India which are exporting? Have you witnessed any spike in claims?
See, actually, we do the due diligence even when the exporter exports. He doesn't expect a default to happen. If at all it happens, then the insurance cover that he has taken has to back him up. See, if you see the claim perspective, the commercial claims largely comes from the developed nations.
That's surprising.
See, the general perception is that African countries or a difficult country, the claims will be higher. So that's not true. Because of the nature of necessity, especially USA has got this chapter 7 to 11. Where the insolvencies are have been made very easy. So there, every year the highest commercial claims will be on account of USA failure. After that, the European countries failure, where the insolvency is one of the major risks in case of a developed country. The other difficult countries, the claims may arise due to political reason only. Then that is also a temporary one. Once the government is overthrown, then a stable government comes, then things get normalized. Now the recent, the last 1.5 years, the challenges we are fighting is most of the underdeveloped and the developing countries have ran out of foreign exchange. So they are rationing the foreign exchange. Because of that, there has been considerable delays, or some cases it has also resulted in default. But this I see is a what called temporary phase only. Once they stabilize, the things will go. But in case of developed countries, the commercial defaults are something very common, which we cannot avoid, and that is something that's a major market also for us. So we have to underwrite, and see, especially big chains going into insolvent. Then again, someone else, some other group takes over that company, and the business also goes as usual. So one end we pay the claim, and over a period of time, again we'll have to underwrite the same company in a different manner.
Yeah. Good morning. I'm Tyagarajan from Guyana. How do you see the new initiative of this export factoring launched at GIFT City taking off? And how much do you think, with this so much of volatility around the Russia-Ukraine war and war erupting at so many places, where do you think we can see a large spurt in the trade exchange and stuff?
With regard to the factoring part of the GIFT City, see, we have started with the factor to factors. That initiative has been done. We are in the advanced stage of that, and GIFT City per se, the international see, we'll have to do all the things in the foreign currency only when we deal there. So for that, the regulatory approvals, those things are in stage, and we are very keen to do. But how fast it will happen is something because what is happening with factoring, we are banking more on the import factors factor. Because ECGC per se, and we are one of the earliest licenses for factoring business. Initially, we started with the maturity factoring. It burned our fingers heavily. Then we tied up with one bank, another bank. That's it. In the initial stage, we were only providing credit insurance. Then we started with the initiative that we will also fund. That has also not, given the desired result. Now we are really keen to do it through a GIFT City in foreign currency. So mostly our GIFT City will be keen on underwriting the factors, then starting our own factoring activity. So this will happen in the coming days.
Continuing with what Mr. Tyagarajan had mentioned, one of the points was about the Ukraine war. So that is always the topic. So specifically with respect to exposures to Russia, or for that matter, right now the Middle East or Iran. So what is ECGC stands and BOD stands with respect to such underwriting? Is it that it is not done at all? Is it typically uninsured, or is it that it is the premiums are high? How does it work?
First question in the earliest, I started with saying that we don't exclude any country underwrite country. Yes. See, we maintain two kind of country grouping. One is the open core country, other one is the restricted core country. Wherever the economies are in trouble or countries into any kind of war situation, then the country is moved from the open core country to a list of restricted core country.
And this happens annually, or
it's a dynamic.
Dynamic
We do it on a quarterly basis, but sometimes the recent case of Bangladesh crisis.
Yeah.
So immediately we had to intervene, and we had brought down the country from B to C.
Okay.
So which will implicate that now the cost of insurance will be higher. And when we move from a country from open core to a restricted core country, for open core country our coverage will be on a revolving basis, which means till he withdraws the cover or we cancel the limit, the credit insurance is made available. But whereas for a restricted core country, again we have a two group. One is group 1 and group 2. For group 1 we give a revolving limit of 1 year, and for group 2 it will be a revolving for 6 months. So for every year then they will have to again apply for a limit. And when it comes to Russia, Ukraine, this is I have not seen this kind of a peculiar situation. See, normally when there is a sanction, lot of activity gets curtailed. But for Russia, one thing, the might of Russia, they should have crushed Ukraine just like that. But it is happening like a civil war. It is prolonging for now. It is more than a year. The other thing is the European sanction also has been very cosmetic. They have not put sanction on all their banks. They have chosen 6 banks, only got 6 banks they have put sanction. So the transaction through other banks is not under sanction. And the other thing is Russia had prepared well before getting into this. What they did is they amassed a lot of gold, and they have also signed a lot of tripartite agreement with their leading countries where their trade is there. They have agreed for say like India rupee ruble transaction.
China.
Likewise, China. That way, they have ensured that the transaction doesn't get delayed. In fact, those who are dealing with Russia now, they are getting the payment well in time. There has not been a single default for Russia, and in fact, the war has been a blessing in disguise for these people. They are getting all the payments in time, and with the rupee transaction after the RBI approval, the banks have opened their Western accounts in New Delhi. They present the bill, then and there they get the payment. So the transaction has been very smooth. But Ukraine has been a different scenario. Ukraine, our exports are not much, but we have been importing a lot of things from Ukraine, especially this for our oil needs.
Has it stopped or reduced?
That is got little bit affected because Ukraine is the person who is more affected than Russia.
Right.
So Russian trade is not that much affected for India. In fact, at one stage now Russia says they got a lot of rupees. They are not able to do. They said what to do with this much of rupees, but still they are continuing the. And our government also is have not given us any kind of instruction to restrict.
Okay.
So our underwriting for Russia, in fact, Russia is not in restricted country.
Oh wow.
So that way our cover has been uninterrupted.
Since you mentioned about this country risk, and you said that it is monitored frequently. So does similar monitoring happen on individual buyers whom you underwrite? And what are typically the trigger points that are red flags? Like do you get like bankruptcies or other things like that?
So what happens is we have classified the buyers into 3 categories depending upon the exposures we have taken. For an exposure beyond say 10 crore on a buyer, the buyer is reviewed on a 6 months basis. Likewise, for a buyer up to 5 crore, it is reviewed on a yearly basis. Likewise, in a 3 categorization. But we have also have tie-up with agencies where our major exposure buyers we have given them the task of monitoring. So what they do is if there are any negative activity, filed for an insolvency, or there has been defaults from his end, or there is some litigations against him. So they will trigger to us that these things are happening. Then immediately we go back to the people on whom we have given our insurance cover, ask them to share their payment experience, and accordingly the limit is reviewed. If they are also facing a payment difficulty, then we place the buyer. If we maintain a list of buyers which is called BSAL, the buyers on whom we had an adverse experience. So that way we monitor the exposure or we withdraw the cover also. So this is a very dynamic process.
One of the things which I wanted to ask is that there is a lot of change in the world with respect to technology, analytics, AI. So how has ECGC and specifically BOD adapted to that? What any initiatives or anything that you would like to highlight?
Let me be candid. We are not open to the challenge of AI. It's now at a very preliminary stage of us. But buyer underwriting as a department in charge of doing the due diligence, we have moved far ahead. In fact, we have now got a lot of engagement with many agencies. See, there was a time only for credit report means we had to rely only on DMV. Today, that is not the situation. There are nearly 15 to 16 agencies available to us.
Country specific?
There are agencies who are very strong in Europe, agencies strong in Africa, strong in USA. So we exploit their expertise. In fact, the buyer report also has evolved a lot.
Yeah.
So these agencies have been very kind enough in their research activity. They are bringing a lot of information. See, for instance, if a particular director, if he is involved in multiple companies, so that information is made available to us. So that helps us in capturing the information on those buyers. If we have had any default situation with them. The other one is the payment experience. How far that's USA. This one critical information is helping us in underwriting in a big way. So how much time they have delayed or how many times they are defaulting. So we also have our record at our place. See, on this buyer, how many times we have received a default, how many times we have placed the buyer in BSAL. So these things will help us in deciding on our exposure. So this is a very continuous process, and the department now is becoming very.
I believe your department is also integrated with a lot of players through the APIs, so that the flow of information is seamless. Lastly, sir, I just had one parting question: is that what are the key challenges that you're facing now with respect to lot of information, as you said, the agencies are there, it flows. There is a lot of support from the government and everything. But as in charge of your department, what are the key challenges that you face?
The key challenge is getting financials on a buyer. See, when we say due diligence, analyzing a buyer without a financial is just taking a blind call. So this is something. We don't know how to go about, because the agencies also come back to us saying that what is reported to the registry is being captured and it is being reported. Now the developed countries now they are having a rule where the companies are given the choice to disclose or not to disclose. Unlike in the Indian situation, we go to any even our own website, you will get the financials for the last 10 years. Hands down. See, India, the reporting system is very, very robust. On a quarterly basis, the financials are made available. Whereas in developed country, they are very restrictive in sharing the financials. So with the available information, we need to take a call. And as I said, unless we approve an overall limit on a buyer, the underwriting is not going to happen. So it's not just the exporters business is going to get affected, our own business also will get affected if we pay very restrictive exposure. So we need to take that risk. Touchwood, so far we have not been into a very bad situation in terms of a higher loss. Unless there's a global crisis, this line of business, the policy line of business, has been very good for us so far.
Thank you so much, Mr. Pandian. This was a very enlightening session. You have given a very good, bird's eye view into the whole domain of export credit insurance, how it functions, how ECGC has been in this domain for a long time, how your different models, technology has evolved. What's your perspective on the different evolving geopolitical type of a situation, as well as the different claims that you are facing right now?
Sir, I find that there is the moment whether it's an insurance company, whether it's a factoring company, or it's a financing company. The preference is always for European and US countries. So, but that does not mean that good buyers don't exist in other geographies. How does ECGC address this?
That's not true.
I fully agree with you. The context that the good buyers exist in other spheres also. At ECGC, we don't have this restriction. We will only do for Europe or US. But as an insurer, when you have to do a due diligence, the biggest challenge is getting a credit. The credit report availability in the African markets is very low, time consuming. So what happens? My customer comes to me, he is ready for shipment. He approaches for an insurance cover. Without a credit report, we will not be able to take a call. It takes for Europe, for African countries, the timeline takes 10 working days to 15 working days. So that is where the challenge is. In fact, I can tell you the highest claims we pay is only because on account of US and Europe, not for African buyers or the Asian or the South American countries. Here now
these claims are for what causes?
Mostly it is insolvency default.
Oh.
The commercial claims, it's mostly on account of insolvency or default only. Europe and the US mostly insolvency. That's a major risk. And in Africa and all, we don't have that kind of insolvency cases and all. But they are identifying the right person. Today, with the social media, the internet in place, a lot of fraudulent transaction happens. That is where we need to be very cautious in underwriting. The challenge in underwriting in the African market is the credit reports. Once the credit reports are made available, we are, in fact, we have been told if one agency report is not supporting us to take a call, we have been advised to take another report from a different agency. So we are making all-out effort to reach out to this market. It's not that we are, trying to avoid.
Thank you.